The global economy will be divided into three groups in the new year. The good, the savers and exporters like China and Germany. The not so bad, borrowers who can still be competitive like the U.S. and the U.K. And then there's the ugly, borrowers that are being forced into austerity measures like much of Europe is. That's the analysis from Michael Jones. He's Chief Investment Officer at Riverfront Investments. He joins us this morning from Richmond, Virginia. Good morning to you, Mike. Talk to me about rebalancing this, as you call it, tripolar world. How do you prepare yourself for this?
Well, obviously the markets are really in a great mood right now because with the compromise between Republicans and Democrats, you're getting stimulus for everybody. You're combining that with $600 billion in money printing by the Fed. And so you've got the U.S. economy going full bore on both fiscal and monetary policy. So, of course, the market loves it. But if we're going to continue this bull market party throughout 2011, we think there's going to have to be a rebalancing among the major imbalances in the global economy. And those big imbalances are, as you mentioned, the savers and the exporters in Germany and China are still saving and exporting. The importing and consuming and borrowing countries of the U.S., the U.K., and the rest of Europe still racking up huge amounts of debt. The only thing that's really been done in the last 2 years since the financial crisis is the borrowing's been moved from the private sector to the public. And the rolling crises across Europe and the spiking interest rates in the U.S. are telling you that game is running out, and we've got to actually address the real issues.
Well, you led there with the tax compromise. We're waiting to see what that final compromise may actually be there within the next few weeks. What could jeopardize this rally? I mean, is a move on the estate tax from 35 up to 45% going to be a game changer in terms of the stimulus being pumped into the economy from your view?
I don't think any of the compromises that are being batted around, the broad outlines of more tax cuts than we originally thought, not just extension of the Bush tax cuts, that's going to stay in place, and more spending for the Democrat side of the House. I think those broad outlines are going to stay in place, and the rest is just details. It's all going to be liked by the market.
All right, so markets already assumed and moved on to the new year. So talk to me about this meeting that we have this week, the Fed meeting. Any kind of insight that you're looking for from them that would influence your projections for 2011?
Well, the big question, I think, that the Fed has got to ask themselves is, what does this big sell-off in the bond market mean for them? In my estimation, the market is increasingly viewing the policies that are being pursued by the U.S. as inflationary. We're printing a lot of money. We're running big deficits. We've done this many times in our past, World War I, World War II, Korea, and the end result has always been the same, inflation. Now, we can forestall that inflation for a while by importing excess capacity from China. But every dollar we print, with China at a 5.5% inflation rate, food inflation at 12%, China is under increasing pressure to let the yuan rise. And as that happens, that means we're no longer importing excess capacity as cheaply. Prices go up at Walmart, and then the inflationary consequences of these policies start coming home to roost.
You're one of the few people to come on and argue that the yuan should not be allowed to appreciate.
Oh, no, we think it should be allowed to appreciate.
But you're talking about dangers of doing that in terms of its impact on the consumer.
There's no doubt when a foreign currency goes up and our currency goes down, there is an impact to the consumer. Your standard of living goes down because the stuff that you want to buy at Walmart cheaply from China is going to cost you more. But that is the consequence of piling on too much debt. Your standard of living has got to go down so that you can repay those obligations. So
your bottom line for the new year is that your word, we're going to muddle through. That's not something to get excited about.
Well, we've got four basic scenarios because let's face facts. We were completely surprised at the outline of the congressional compromise. We did not think the Republicans would agree to such big budget deficit increases right after being elected on a get the deficit down platform. So policymakers can surprise you. So we have four scenarios based upon what policymakers do. The big bull market is if China and Germany make major policy changes to consume more, export less. That gives you global demand. That's what we need right now.
Right.
You combine that with credible action on the deficit by the U.S. Bull market. If you get less dramatic, that's the muddle through.
I gotta cut you off because the computer's about to take control and bring us to break right here.